This bipolar market, are we going down? Are we doomed for a downturn? Or are we on the cusp of a huge rally? Look, I will tell you, there are data points all over that we tried to put you onto 2 weeks ago. Wrote a piece in the newsletter, 10 top reasons we're not going into a bear market. And some of the cornerstone of that was sentiment. Sentiment was at too extreme of levels, no matter what reading you looked at. CNN Fear and Greed Index, the AAII institutional survey, it didn't matter. Now this week we got the Conference Board survey, right? And the Conference Board survey showed that investors have soured on stocks at a record pace in the last 3 months. And man, this looks like a tempting contrarian buy opportunity to me. It always has been one standard deviation away from the norm here if you look at the bull-bear spread in this survey. And I think sentiment's important. But look, I could also point to other reasons why we can expect a rally to continue. One being short interest. It ticked up to about 2.3% of the total market. That's historically a time where there's a lot of shorts to cover. Another thing I could be talking to you about for a catalyst is the fact that pension funds and 401k funds have to rebalance at the end of this quarter. And because of the stock drawdown, don't worry about all the lines and jots and tittles here going on. Just all you need to know is that's a lot of buying power that could come into the market here as we look at quarterly rebalancing. I could point out about insider buying and how we've seen an uptick in insider buying, which is always a bullish sign because, as Peter Lynch famously observed, insiders buy for one reason and one reason alone. They think stocks are going up. Now, they sell for a lot of reasons. Maybe it's divorce, maybe it's just tax planning, maybe it's an automatic trading plan, but they only buy for one reason, and they've stepped back in. But here's where I want to anchor my point that we should not be afraid of the bears that are coming out in full force. Look, the markets are up 75% of the time, so when they get a rare opportunity to hope and predict that all their predictions from months and quarters and years gone by are going to finally come true, they lean into that. But here's the key for me. If you look at the Conference Board sentiment and it dropped by 10 full percentage points, this is an analysis done by Bespoke Investment Group with our pretty graphics laid on top of it. But there's been 8 instances where we've seen that precipitous drop in consumer confidence, and 7 out of 8 times it's marked a market bottom, not a top. We really have to look at this. The sentiment is an extreme contrarian buy signal, and I will stand by the 2 weeks ago prediction that we're headed higher from here, and here's a big reason why too. Earnings keep growing, right? Up almost 18% in the fourth quarter. Projections for 2025 and 2026, double digits growth. And stock prices ultimately follow earnings. So beware of the bears and falling prey to their fear-mongering in the headlines, and look for good opportunities in this market. You should always have a buy list ready on things you want to pounce on.